Right, I've actually put a question into the chat box. Hopefully you can hear me, and hopefully you'll be able to hear me. If someone could put a yes in the chat box, loud and clear. Oh, thank you, Nick. Thank you so much. This is David, as I said, put his headset back to front, but never mind, never mind. Right. Welcome to the webinar. But before we start, as always, may I just draw your attention to the disclaimer that you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, I'm going to do something very different today. I'm not just going, I know we've got some new people in the room. I usually do a little bit on what you can expect to hear and see in this webinar, because I just want to set that to aside for 1 second, because we've had some very interesting price action on the pound Aussie. There's lots to cover in terms of what's happening generally in the markets. There's a lot of divergence going on at the moment in terms of sentiment towards our risk currencies and what is actually happening in the broader market. Those of you who are on the program will know what I'm referring to. The relational markets are working. There's a bit of a shift going on. We're kind of at an inflection point for all sorts of reasons. But I just want to bring up the pound Aussie, because we are coming up to the London Open, and it's just been a really nice bit of a price action. Now, we look at price action in these sessions for the benefit of those who haven't come across my books or not on the Forex program. We look at the price action through the prism of volume price analysis, and David and I have developed a set of tools to help us in the methodology and to make sense of the Forex market. And the reason I've pulled up the pound Aussie is because we've had this very strong move just before the London Open. And this is something else you have to be aware of if you're just starting in this business in the Forex market, is that you have to be aware of what we call these session crossovers. Obviously, we've come out of Asia Pacific, that's sort of winding down. Europe has started, and now we're waiting for London. London takes the lion's share of this business. I think it accounts for over 40% of I don't know, is it 5, 4, 5, 6 trillion dollar a day market. I mean, the numbers they just don't mean anything because they are so huge. And when you see these big moves at such a point, you have to beware, because the chances are you could or you probably will be sucked into a move, because when you have these crossovers, you have a fresh set of traders coming in, a different opinion on what they see. Orders have to be fulfilled by the institutions, so you do have to be on your guard. Now, if you miss the move, doesn't matter. You're always, as a trader, you're always going to miss a move somewhere in this market, because this market is a continuum. It oscillates between what we call states of overbought and oversold, and in between those moves, we have periods of congestions, periods of pause. Markets pause for all sorts of reasons, lack of participation, maybe they're waiting for a piece of fundamental news, and then on it goes again. Because we use time charts, everything seems to move at a steady pace. If you're looking at a 3-minute chart, as we see here, for this particular pair, we can actually see the move that I'm referring to. What time did it start? Let me just hover over here a second. Let's have a look. We've got 9:03. It's actually 7:03, because with MT4 and 5, you usually have to take a couple of hours off the time that is shown on this timestamp. So this was from the European Open, basically. But look what has happened before to this pair. It's been in what we call this consolidation phase. It had been a move, it then pauses and moves sideways. So at 7:03 this morning, we have this breakaway, reasonable amount of volume coming into this move high. The move is also associated with volatility. How do we know it's volatile? We have this indicator, which we call the volatility indicator. This triggers in real time. These little purple circles are triggered. On some platforms, it's a little triangle. That's because this price action in this candle is outside of the average true range. Up it goes. what tends to happen with when one of these signals appears on the chart is the subsequent candle, it starts life, it retraces to within the spread of the candle. This actually did, if you can see here, it's triggered, the subsequent candle retraced to within the spread of the candle, but then it actually did move further up in white. We've got some buying coming in, so that volatility trigger was supported. There was a continuation in the move higher. Now we've had another volatility candle, as we can see triggered here, but this time it's retraced to within the spread of the candle, and it's a much more typical reaction, which is you then get a period of congestion while the market decides, is it going to carry on higher, or is it actually going to reverse? And the reason I pull it up, normally if this appears midway through a session, you can sort of say, well, you know, you look at multiple time frames, you can look at your indicators, you can look at the price action on maybe a Renko chart, and you get a feel for, is it going to carry on or is it actually a reversal? But because we're coming up to the London Open, you really do have to sort of perhaps you know, just take a step back and wait to see what happened. We've had a lot of volume going in to this move at the moment, and it's really going to be interesting to see what happens when the London traders come on board. Now, what I said earlier about when you look at a time chart, each candle opens and closes at the end of a set period of time, because it's a 3-minute chart, it's a 5-minute chart, but you have no sense of what is actually going on behind the activity that is going on behind that candle. I know you have the price range. Obviously, when you have, you know, the price range moving higher, there's obviously and the volatility is triggered. We know we have momentum behind that move. But generally speaking, you know, the candles will just complete at the end of a specified time period. And this is where using time charts in conjunction with a non-time-based chart, and here on the MT45 platform, I have my MT5, we have a Renko chart, and these only complete, these little candles or bricks as they are, Renko means brick in Japanese, they complete once a given number of pips or points go through the market. Now I have set these at 3 pips. So you can judge the speed, if you like. If these come out very, 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 very quickly, you know things are moving very, very fast. Now you use the Renko not only to give you a sense of the momentum, but those of you who have invested in these indicators, you know, we always say they help you with your entries, holding a position, possibly even more than entries and exits, because this is a very fast move. When you look at the chart, the time chart, this is a very fast move as well. It's almost a vertical move. Sometimes it can be even more volatile, lots of wicks to the tops and the bottom. But what the Renko does, it helps to smooth that out and help you keep you in. Now, the next question, we're waiting for London. We've seen this move. Is it going to carry on higher? Is it actually going to be a reversal? All sorts of questions that traders may be coming to their desks would be asking themselves. This is the pound Aussie, but this type of price action is typical. You know, you will find this repeated across all the markets, pairs and instruments. And the next question we want to know was, where is it going to? Is if it's going to carry on higher? What are my levels? What am I looking at? Now, this is a 10-minute chart, but this chart is constructed in a slightly different way, because with the quantum indicators, we use the Camarilla levels to help us determine potential price objectives, just levels that the price is possibly going to pause at, where it's going to break away from. We have 6 levels on the 10-minute chart, and we can see here this has actually precipitated a break through the R4. The 4th level in this indicator is most important, in the sense that if it goes through on good volume, it is considered a a valid breakout. The next important level is the R6. It's going through the R6 again. We had volatility triggered also on the 10-minute chart. So, you know, we had again a little retrace, a little bit of congestion around the R5. It's now hit the R6. And I'm highlighting this because it's really interesting to see this price action at a very specific point in the trading day, which is this session crossover, where I'm fascinated to see what happens now, because a lot of traders get sucked into these kinds of moves, not aware, particularly if they happen just before a big crossover session, that the chances are is they are going to be sucked in and be on the wrong side of the market. Because when you see a fast move like that, the temptation is say, oh, I've got to get onto it, I've got to get onto it. Now, we are at the top level on the R6. This is the 10-minute chart. The beauty of this indicator is that these levels up to the hour, but not including the hour, are calculated every 24 hours. So we know we've blasted through the levels to the upside for today. So, well, where do we think is it going next? So we can go up to the 1 hour chart, and where are we? This gives us another set of levels which are actually going to be on this chart for the rest of this week. So we've gone through the R2, we're getting to the R3. You know, we are, you know, these are pretty strong, potentially pretty big moves for this pair. This pair can do this. It can go into being consolidation for, you know, a long time, and then when it does break, it can deliver some very, very large pip values. And we can look at the R3. We've got a resistance over here at 183.05. The R3 corresponds with this R3 here. So really interesting price move on this on the pound Aussie, and I'm just going to wait. We've got 3 minutes to go for the London session, and we're going to see what happens. Looking at the CSI, I've actually taken out the currencies concerned. I've actually blocked out all our other currencies, and we can see here the Aussie is still falling. We've got the pound looking as though it wants to move higher. Let's go down to the 10 minutes, see what's happening over there. But as I said, it has to be read in the context of what is coming up next. Looks like a little bit of overextension, certainly on the pound, you know, a little bit of flattening off here. What's happening on the R6? Certainly, you know, as I said, it's certainly picking up the, you'll find just before 8 o'clock, there's a lot of lot of movement going on with in the currencies and currency pairs. And finally, I just want to show you the same price action on NinjaTrader, where we have an indicator that helps us see the activity that's building up behind the price action. I'm just going to pull up the 10-minute version of this chart. Let's have a look, because we see here we are. There we are. This is the R6 again. This is the our tick speed indicator. And you can see here in congestion, it was flip-flopping between the orange and the red. It's a little quiet time. Yeah, there's activity. Then you have the burst, which obviously goes into green. The market is speeding up. It's kind of it's a speedometer. You know, this is like the, you know, the market's put its foot on the gas, as it were, and it moves. It bursts. You know, bursts higher or goes lower. So we've got, then you have a pause, as we see, we go into the red. You still have movement, but it's slowing down, and now we're back into the green again. But we would expect that because we are coming to the London Open. I'm just going to stop there and pass to David and see if he wants to add anything to that. And really the best way to see this is to watch it as it happens in real time.